Just by nature of being an option trader, I get a lot of friends and family asking me what are good stocks to invest in 2022. And so I always respond by telling them what I'm looking for. I'm looking for stocks or ETFs that have a future growth potential, but are currently in an oversold condition. Here's a stock that recently popped up on my screener that has great potential for becoming an option trade. ESS Tech Incorporated, stock symbol GWH, has a market cap of $1.3 billion and an average trading volume of 2.3 million shares. This company was founded in 2011 and it's headquartered in Wilsonville, Oregon. And they design, build, and deploy commercial and utility scale energy storage applications worldwide. Now, the company provides its energy warehouse and energy solutions to the business marketplace. Its products are used for various applications, including utility scale, microgrids, distributed energy management systems, virtual power plants, and commercial and industrial applications. So needless to say, I like this company, what they do, and what they stand for, their mission statement, because I'm always looking for ways to support sustainability, right? Moving away from fossil fuels and moving more towards sustainable energy supplies. And so this technology could be used, for example, storing energy generated from solar, wind, or hydroelectric. Here's a daily chart going back to December of 2021. As you can see from the chart, this company's output from a SPAC, a special purpose acquisition company. After the company's IPO, the stock dipped to a low of around $7 per share and then gapped up and hit a high of around $28 per share. Now let's zoom in and take a look at what it's doing today. This stock is currently trading at $9.46 per share. You can see the stock has been on a downward dip, but as of today, it's starting to turn green. And of course, there's no way to predict if the price will continue improving, but I wouldn't mind acquiring some shares at this price point. And that's because I believe this stock has hit an oversold condition. So now investors are taking a look to see if they can pick up the stock at a bargain price. And this includes me as well. But I'm not the only one that believes this stock could go higher. Let's take a look and see what the industry analysts think. So out of the 6 industry analysts, they give this stock a strong buy recommendation. And they've set a 1-year price target of $23 per share, giving this stock an upside potential of 142%. Situations like this are perfect for me to use this stock as the underlying security for selling a cash secure put. Because if the option gets exercised and I get assigned the shares, I won't mind owning this company, number one, because I like what the company does, but number two, it's got some potential for future growth, right? So the industry analysts believe that this stock could be $23 within the next year. Now, obviously, there's no guarantee, but if I'm holding this stock at a $9 acquisition price, having it jump to $23 works out really well for me. So let's take a look at the option chain for GWH. Here we can see the option chain, and I'm considering selling a cash secure put. And let's go 1 month out. So that's going to be February 11th. And I could use the $8.50 strike price, which is currently paying 48 cents per share in premium. Let's take these numbers and plug them into my Picking Stocks for Options analyzer. So it's stock symbol GWH with a February 11th expiration date and a strike price of $8.50. And let's verify the premium price. It's currently paying 48 cents per share in premium. So with a February 11th expiration date, that makes the length of this option contract 31 days. And because I have the $8.50 strike price, I'll need to reserve $850 as my collateral, and that's in case the option gets exercised and the shares get assigned to me. Now, if the shares do get assigned to me, I'll end up paying $8.50 per share, which is a savings of 85 cents off the current market price. And that 85 cents represents a discount of just over 9%. Now, for selling this option contract and having it get filled, I'll receive a premium payment of $48, and that'll show up as a credit deposited immediately into my trading account, and that money's mine to keep forever, regardless of the disposition of the option contract. So if the option contract gets exercised, that $48 is still mine to keep. And also, if the option contract expires worthless, I still keep that $48. I'm able to use that money for whatever I want. I can use it for more investments, or I can withdraw it and store it directly in my bank account. The great news, that $48 premium payment represents a profit of 5.65% based upon the amount of money I had to reserve as my collateral. So if you're familiar with my channel, you'll know that I like to receive a premium that provides 1% per week for each week that the option contract is open. And in this particular case, the length of this option contract is 31 days or 4 weeks. So my goal is to receive a premium payment that would provide me at least 4% return. And in this case, I'm getting 5.65%. Get my trade alert notifications and watch my live trading sessions inside of my Simple Trading Room community. Come on over to discord.simpleoptiontrading.com. I'll see you over there. Some of you may be thinking that you don't have the $850 available in your trading account to reserve as a collateral for this cash secure put option trade, and you're wondering what else can you do? Well, here's an alternative. For me personally, if I'm bullish on the stock, but I can't afford their collateral requirements for selling the cash secure put, I could always turn to buying a leaps option. Let's go back to the option chain and take a look at the leaps options. So I'm going to press trade. And then I'm going to pick an expiration date as far as I can go. In this case, June 17th of 2022. So this will be a 6-month option, and I'm going to be buying the call. And if I use a strike price that's deep in the money, say this $5 strike price, the premium for this long-dated call option is $4.35 per share. This is a less expensive method of getting into an option trade where I believe that the underlying stock price will go up. So the first method that I mentioned was me selling a cash secure put, but it required me to reserve $850 as the collateral. But now with this leaps option, I can control 100 shares for 6 months, and it only costs me $4.35 per share, or a total of $435. Now if I'm correct and the price goes higher, then the value of the leaps option will also increase, and then I can either exercise this option if I have the money for the shares using the $5 strike price, or I could just sell the leaps option for a profit. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.